Welcome back to The Explainer. If you're a focused learner looking to cut through the noise, you are in the exact right place. Over just one single weekend, we saw 6 massive, seemingly completely disparate news stories hit the wire. But when you actually look closely, they all perfectly illustrate this massive, escalating clash playing out right now between centralized control and decentralized disruption. It's a truly fascinating dynamic, and we're going to break the whole shebang down for you.
Okay, let's dive into this. Here is our roadmap for today. First, the end of the crypto winter. 2, SpaceX's massive Bitcoin treasury. 3, the government shutting down Claude AI. 4, Microsoft exploring an Xbox spinoff. 5, a critical Splunk security vulnerability. And 6, gaming updates and final thoughts.
Section 1. The end of crypto winter and Standard Chartered's bold declaration. So kicking off Act 1, we're basically witnessing traditional finance capitulating to decentralized money. It starts with a major banking institution officially declaring that the crypto winter is over. I want you to really process the number $59,375, according to a comprehensive market analysis by Standard Chartered Bank that dropped on June 13, 2026. That was the definitive cycle bottom hit back on June 5th. That marked a brutal 53% decline from previous all-time highs. But, according to the bank, that pain is completely in the rearview mirror now. Jeffrey Kendrick, their head of digital asset research, actually penned this incredible line, "Winter is over, welcome back to crypto spring." And remember, Kendrick is the guy who accurately predicted the massive 2025 surge to $126,000 back when everyone else thought he was being overly optimistic. Now, what's really interesting about this isn't just the bold quote, it's the actual underlying catalyst driving this conclusion. Standard Chartered points to 3 really logical catalysts here. First, the liquidity vacuum. The massive drain of available cash created by SpaceX's $75 billion IPO. Well, that's been fully absorbed now, and institutional capital is flowing right back into Bitcoin ETFs. Second, oil prices have plummeted below $68 a barrel, which eases inflation fears and gives the Fed some room to cut rates later this year. And third, on-chain analytics, tracking the actual blockchain data, show long-term holders quietly accumulating 94,000 Bitcoin since just June 1st. For American investors, this matters right now. It's exactly why dollar-cost averaging into accessible spot ETFs remains a highly effective strategy to just smooth out the volatility without trying to perfectly time the market. All right, Section 2. SpaceX's massive Bitcoin treasury and entering the corporate arms race. And that perfectly sets up our second massive story. The whole institutional adoption thesis championed by Michael Saylor, it's no longer theoretical. It is an empiric reality now, with SpaceX officially joining the public markets and finally revealing their hand. Take a second to just comprehend the sheer scale of $1.44 billion. When SpaceX began trading on the NASDAQ under the ticker SPCX, their S1 amendment revealed that they hold a Bitcoin treasury currently worth approximately that much. They acquired this gradually, and it's already generated a massive 95% unrealized paper profit. Literally incredible. But it gets really interesting when we compare this to other corporate giants. MicroStrategy, sitting at rank 1, utilizes Bitcoin for roughly 95% of its entire treasury. Conversely, if you look further down the rankings at number 4, SpaceX's massive billion-dollar holding represents only about 0.07% of its $2.1 trillion market cap. So it's a strategic reserve. It brilliantly aligns with SpaceX's 10 to 20-year project timelines for Mars and Starlink, acting as this non-sovereign inflation hedge over a very, very long operational horizon. Moving to Section 3, government shuts down Claude AI, the iron fist of centralization. Now we're pivoting sharply here. While crypto showcases decentralized adoption, we are simultaneously seeing the heavy counterforce of centralized power. The U.S. government has just executed an absolutely unprecedented global shutdown of Anthropic's Claude, Fable 5, and Mythos 5 AI models. Let me walk you through this rapid-fire timeline so you can visualize the sheer panic and speed of this regulatory action. Day 1, public launch. Day 2, reports emerge of the model passing advanced red team challenges. By day 3, the Department of Commerce holds an emergency meeting with Anthropic executives. And by day 4, a global shutdown is implemented. And we're not just talking about adversarial nations. This applies globally to all users, including American citizens. Anthropic pushed back, releasing a statement reading, "We disagree with this decision and believe the capabilities cited as justification are widely available in other models that have not been similarly restricted." This highlights a massive point of tension in the industry. Anthropic is being shut down globally, while competitors like OpenAI and Google remain entirely untouched by these expert control directives. Which brings us to a really crucial debate. On one side, the government is citing severe national security risks, allegedly involving the model's ability to generate zero-day exploits and assist in bioweapons design. On the flip side, however, the industry is buzzing with speculation about competitive suppression. People are questioning whether incumbent tech giants lobbied for regulatory capture to basically stifle Anthropic's momentum. Now, we're impartially analyzing the source material here, we're not taking sides, but the stark contrast between these two narratives is undeniably reshaping the entire AI landscape. So the absolute crucial point to take away here is this. If you're a developer or a business owner building on frontier AI, the most cutting-edge models available, you simply can no longer rely on a single provider. You absolutely must diversify your AI stack. You need to favor open-source models like Llama 3 or DeepSeek that can be self-hosted and are immune to these sudden regulatory shutdowns. You have to plan for complete model unavailability, because as we've just seen, your entire product could be rendered non-functional literally overnight. Section 4, Microsoft explores Xbox spinoff and the 3% margin dilemma. Let's move into Act 3 and scale things down to corporate realities for a minute. We're looking at Microsoft's board-level deliberations right now as they actively explore spinning off Xbox into a wholly owned subsidiary, a joint venture, or maybe even an entirely independent company. And the problem instantly makes sense when you compare the operational margins. You have Office 365 generating an estimated 45% operating margin, and Azure right behind it at 42%. Then you have Xbox, sitting at an anemic 3%. Within a $3 trillion empire that expects double-digit profit growth across the board, a 3% margin on $21 billion in revenue is fundamentally viewed as a structural failure. Xbox CEO Asha Sharma has this whole turnaround plan, focusing on reviving franchises like Halo and Fallout. But a spin-off presents a massive dilemma. On the one hand, independence brings creative autonomy and the freedom to put Game Pass on rival platforms like PlayStation without corporate conflict. But the risks are huge. An independent Xbox immediately loses Microsoft's $140 billion cash backstop, and it risks destroying deep synergies with Azure's cloud gaming infrastructure. Section 5, Critical Splunk Security Vulnerability, Unauthenticated Remote Code Execution. Shifting gears again, and please pay close attention if you work in IT. A terrifying cybersecurity flaw has just been disclosed in Splunk Enterprise. Now, this is a foundational security log management tool used globally by major banks, tech companies, and government agencies. The vulnerability, tracked as CVE 2026-22053, carries this devastating CVSS critical score of 9.8 out of 10. The reason that score is so dangerously high? Because it requires absolutely zero authentication to exploit. No stolen passwords, no phishing clicks required from the admin, nothing. Let's move to and see how this actually builds into an exploitation chain. Step 1, an attacker simply gains network access. Step 2, they discover a background database service, the Postgres sidecar, running without authentication controls. Step 3, they issue direct file operation commands. And Step 4, they achieve remote code execution. This gives them full control over the very security system designed to catch them. So, if your organization uses Splunk, system administrators need to patch to version 10.2.4 or 10.0.7 immediately. Section 6, Gaming Updates. Onimusha specs and the big picture. We're entering Act 4 now, so let's take a quick, lighter palate cleanser with some gaming news before we look at the big picture. After more than 15 years, Capcom is finally bringing back the highly anticipated Onimusha franchise. Briefly touching on the technical specs, you can expect native 4K targets for PS5 and PC, but for the Switch 2 docked version, Capcom has implemented a really smart compromise. They're offering a variable frame rate mode, allowing the game to unlock between 30 and 40 frames per second. It sacrifices a tiny bit of visual consistency, sure, but it drastically improves combat responsiveness for players who really want that edge. Finally, Section 7, the core tension, control versus disruption. And this brilliantly illustrates what it all boils down to. Centralized power structures are attempting to control decentralized forces. Think about it. We have traditional banks finally legitimizing decentralized crypto. We have governments using emergency powers to contain open AI proliferation. We have Microsoft trying to force 3% margin gaming divisions into enterprise-grade profit models. The fundamental, undeniable clash of our current era is between traditional control and technological innovation. Which leaves us with this massive, era-defining question to end our explainer today. Will these centralized interventions, whether it's AI shutdowns, corporate spin-offs, or institutionalizing crypto, actually accelerate our technological progress, or will they ultimately hinder it in the decade ahead? I want you to think critically about how this will shape your industry, your investments, and your future. Thank you so much for joining us for this explainer today, and keep learning.